There's a mortgage product in Canada that allows you to pay less interest every single day, and most Canadians have never heard of it. This is part one of a 4-part mini-series where I'm gonna break down the mortgage product that everybody's talking about on social media, Manulife One. The way this mortgage product works is you have your paycheck flow into an all-in-one account, which encompasses your checking account, your savings account, your mortgage, and line of credit. Now, with your income flowing into that all-in-one product, you are reducing the amount of interest you pay because the interest is calculated on a daily basis. You become mortgage-free years faster. We're typically seeing between 5 to 8 years for our clients. Now, I haven't seen a lot of people talk about this feature here, but this is one of the most flexible products in Canada because it allows you to really customize that monthly payment. Every dollar counts when it comes to reducing that daily balance because, again, the interest is calculated on that daily balance. So this can be any savings you have parked in other accounts, have that come into the all-in-one account. If you're commissioned or you're self-employed and a sole proprietor and you have big swings in income and you want to pay yourself as much as possible through the year and use that all-in-one account to then pay back your taxes at the end of the year, this is a great product for you. Now, let's not kid ourselves. This is a prepayment privilege strategy. There is no magic voodoo math here, but the power of this strategy is the fact that you have the flexibility down the line. If you need to tap into equity, you can do that very easily with this product. Your money's not locked away, unlike standard mortgages where you're using prepayment privileges to pay off your mortgage faster. And one of the arguments is, why don't I just use a regular mortgage with a slightly lower interest rate to pay off my mortgage quicker? Well, the fact is, when you have your income deposited into your account on day one, over time, you're actually reducing the amount of interest you pay. So there is a big difference there from using this strategy versus just using regular prepayment privilege strategies. In part two, I'm gonna break down a case study, show you the numbers, so give me a follow so you don't miss it. Two people with the same income, the same expenses, and same mortgage balance and rate, but this person over here is mortgage-free 7 years faster. And the main difference is his paycheck is deposited into his mortgage and line of credit instead of his checking account. This is part two of a 4-part series where I'm breaking down the Manulife One Mortgage product, also known as the offset mortgage strategy. Everybody's talking about it. Let's break down the actual numbers and show you the difference between this and a standard mortgage. Okay, so in this example, we're gonna use a renewal offer with a $700K mortgage, 25-year amortization, 5-year term left, and a 4% rate being offered by their bank. So now let's break down the difference between their renewal offer and the offset strategy. So looking at this right here, the traditional mortgage, their monthly payment is $3,682. So with the offset strategy, everything is the same except for the monthly payment. This is in fact a bit lower, and that's because a portion of this mortgage is in a line of credit, which is interest-only payments, and the rate is slightly higher because with this product, you often do have a slight rate premium. So in this case, it's 4.14 versus the 4%. Years saved is 9.25 years, and payment saved is $407,000 compared to the standard mortgage. Now, as a reminder, the reason why this is happening is it's essentially a prepayment privilege strategy, but the main difference is the income is being deposited into that all-in-one account on day one, which is reducing the overall interest you're paying over time. And in this case, I was using a positive cash flow of $1,800. But I know you're thinking, okay, well, I don't have $1,800 of cash flow every single month, so let's reduce that down to $800 a month. You would still save over $210,000 in future mortgage payments and be mortgage-free 4.75 years faster. So where you're really gonna see the results come from this is where you have a higher cash flow, higher mortgage amount, and longer amortization. But as you can see here, even using I call it the scraps of the positive cash flow every single month, it will have an effect on how you reduce that mortgage over time. In part three, I'm going to discuss how the Manulife One Mortgage came to be here in Canada, why it's one of the only mortgage products structured like this, the offset mortgage strategy, and why I think this is gaining so much traction and popularity within the last couple of years. So give me a follow if you don't want to miss it. The mortgage strategy and product that a lot of wealthy Canadians are using today in Canada didn't originate here. It actually originated in Australia. This is part three of a 4-part series on the Manulife One Mortgage product, where a lot of Canadians are using this product to pay off their mortgage years faster. And today I'm gonna be talking about where this product came from, why all of a sudden a lot of us Canadians are hearing about it for the first time, and we're gonna dive into it starting now. So the mortgage offset structure, which is what the Manulife One Mortgage is built off of, was originated in Australia, but brought into Canada in 1999. And Manulife was the first company to adopt this structure, and in fact, it's only one of 2 mortgage providers in Canada that has an offset structure. And the reason why you haven't heard about this product up until maybe a couple years ago, couple months ago, maybe this is the first time you're hearing about it, is because Manulife originally just launched this to their financial advisors. They never really went direct to consumer from a marketing perspective, and it quietly just happened behind the scenes where financial advisors were either adopting it for themselves or recommending it to their clients. And traditionally, the clients that worked with financial advisors were high net worth clients, which is a very small percentage of Canadians. Now, brokers have had access to this product for quite some time, but the honest truth is that a lot of mortgage brokers didn't really understand how to use this product because it was so different compared to the standard mortgage products in Canada. But that has changed within the past, I would say 3 to 4 years. A lot of brokers have doubled down on understanding this product, specifically a lot of brokers within my brokerage, Tango Financial. And now you couple that with the power of social media, and that is why we are now starting to hear more about this product, and it's available for all Canadians, not just high net worth clients working with financial advisors. And as I've said in previous videos, this product isn't for every single person. Typically, we reserve it for clients that have positive cash flow and they're not just breaking even or on the negative side at the end of the month. Stick around for part 4, where I'm going to be going over common misconceptions and questions I get about the Manulife One Mortgage. And if you want more information about the strategy overall, comment offset down below and I'll send you over a full video. I get asked the same questions about Manulife One and the offset strategy every single week. So I'm going to go through all of them in this video, including the biggest misconceptions I hear all the time. Misconception number 1, Manulife has a higher interest rate, so it's just not worth it. So while the interest rate might be slightly higher than a traditional bank, you have to look at the overall volume of interest you're paying through the life of your mortgage versus the actual rate itself. If you're running the strategy correctly, you should be having that income flow into that all-in-one account, which reduces that interest on a daily basis, effectively reducing the amount of interest you pay over the years of your mortgage. Now, in order for this to work, you have to have that positive cash flow, because at the end of the day, a quarter-point rate premium won't really matter in the grand scheme of things if you're running the strategy properly. Second thing I hear is that people say it's too complicated. And while I understand where they're coming from, it's a new concept, it's outside the norm. It's actually easier once you understand the concept and once you have it set up. And that's because with this strategy, you're reducing the amount of accounts you have. And on top of that, everything is automated with the software built in. Number 3, you have to be wealthy in order to use it. It's not the case. As long as you have a positive cash flow and you're responsible with your money and you have the structure set up properly in the first place, you are good to go. Frequently asked question number 1, how is this different than prepayment privileges on my traditional mortgage? So this is a prepayment privilege. There is no doubt about that. It's not some crazy voodoo thing happening in the background, but the difference between this and a traditional mortgage is the fact that this is fully automated. It takes the human element out of it. And in my experience, someone that's trying to do this and duct tape it with a traditional lender, they give up after 2-3 months because of the manual transfers and the thought process behind it that they have to do every single week and month. Number 2, why isn't everybody doing this? It's not for everybody. That's the first thing. And the second thing is not every lender offers this. There's only 2 lenders that offer this product. So naturally, not everybody's going to have exposure and understand that this product is available to them. Number 3, can I run the Smith maneuver with this product? Absolutely, you can. This actually makes it a lot easier for us and you and the CRA if you do get audited with the Smith maneuver strategy. And that's because within the Manulife One product, you have features that allow you to track the interest specific to your investments. So it makes it a lot easier and safer for you if that audit ever does come down the line.